All right, what is going on? Just before we start, this is not financial advice. I am not a financial advisor. And yeah, let's get into it. This is for entertainment only. And yeah, so I have not posted in quite a while. And part of that was because I was on vacation, but the other part was because I was working on this one video and how I was going to perfectly present it because there was so much information that I'm about to unload on this video that you should basically have no questions on the trading process. Of course, I'm always still around to answer questions, but this is supposed to be a summary of basically everything from what are stocks, what are futures, to how to trade them, how to manage risk in trades, how to develop great trading psychology, and what my personal strategy is. And it's all for free. So all I can ask is, can I get a like, a subscription, or maybe a comment? And if you do want to join our Discord, it's in the bio of my Instagram. So yeah, let's get into it. Okay, so here is the list of every single thing we're talking about in this video. Basically nothing, right? But there is a lot that goes into every single one of these questions, so bear with me. It's a long video, but if you really, truly, truly are serious about getting into trading and you want to know everything, then this is what it is. All right, so what is day trading? So obviously, when you look up day trading on Google, the definition is a strategy of buying and selling securities within the same trading day. So what securities are we trading? So I traded options. I still do trade options, but not as much. But my strategies are for Forex and futures. So now let's go into what are futures. So once again, what are futures? If we look this up, futures are financial contracts that obligate two parties to buy or sell a specific asset at a predetermined price and date in the future. So it could be a commodity, which is what we trade, and that's basically all you need to know. So yeah, a legal agreement to buy or sell a particular commodity asset at a predetermined price at a specified time in the future. So basically, we are trading the S&P, which the S&P futures move exactly like the S&P stock. So if you guys have ever heard of the S&P 500, then you should know that it's basically the main stock that everybody tells you to invest in at a young age. It's 500 of the best companies in the United States or the world. And it's basically how everybody looks at the market and how the U.S. stock market is currently performing. So as you can see, year to date, the S&P 500 is up 17.3%. Obviously, very good numbers. And Max, obviously, all time, it's doing fantastic because of the the growth of the market and of the United States economy. As you can see, we dipped in 2008 with the recession. We dipped in 2020 with COVID. But overall, we have been on a uptrend, and that's why so many people tell you to invest your money into it. So what we do is we trade the S&P 500 futures as well as the NASDAQ futures. NASDAQ, basically the exact same thing as the S&P, but the NASDAQ covers more as an index, covers more technology field. So what is day trading? We've went over. What are futures? We've went over. Now, why do people trade? So the problem with trading and why so many people are not successful is because people view it as a get-rich-quick thing. It is literally the exact opposite. There are so many steps that go into becoming a good trader. There is psychology, which is the number one most important thing. Many people think, okay, as soon as I learn how to trade, I'll be a good trader. That is absolutely false, because anybody can learn a strategy. I'm going to teach you guys the strategy step by step in this video, and by the end of this video, assuming you also are taking notes and then you go off and do your own research a bit just to, familiarize yourself with it even more, you'll know the terminology, you'll know the strategies, you'll know what to do. But as much as I'm going to try to teach you psychology, one, I'm not a psychology teacher or a psychologist, and two, I can't control what you think. Because once it gets real and once money starts flowing and you start seeing red and green numbers popping up, some of you are going to fold, and that's just how it is. So people trade because they want to make money and they want to live freely. Instead of clocking into a job every day, you could trade from all around the world. I trade in my bedroom. People could trade in France, Spain, Portugal, wherever they want to trade. As long as you have a phone or a computer and some internet connection, you can do your job and you can make a living. And many people make a living through trading futures, options, forex. It's so free, it's such a freeing thing because once you work hard and learn how to do the skill, it basically feels like you're invincible and you're just printing money. However, so many people fail, give up, because they think of it as a get-rich-quick scheme, and as soon as they realize that this is taking a long time, or I'm losing, or I'm not everything is being handed to me, they look for the door. And that's why it's so difficult to become a popular or to become a profitable trader, because so many people are telling you, oh, this is BS, this doesn't work, as well as you're seeing, wow, I'm not getting the returns I thought I would get immediately, screw this. So that's why people trade. I trade because, I know that it can generate me, a good amount of money, so that's what I do. So let's get into platforms to know. The most important platform you will ever know is TradingView. Remember TradingView. You can make an account for free, and you can look at the charts on every single thing you want. Now, this is the NASDAQ, what I said we trade. This is the S&P, what I also said we trade. The NASDAQ is so key, and the US and the S&P are so key to my strategy. You need to be able to find these two guys, all right? Now, so many people, about the first thing that people ask me are, how much money do you need to start? I don't have that much money. I'm, let me see if I can find. I don't have that much money. How much money do I need to start with this? Because so many people, when they get into investing, they think, oh God, I'm not going to make any gains. You look at the S&P 500, right? If you literally held the S&P for the year, 17% is a lot of money. But if you only invested $100 in it, congrats, you made nothing, right? So that's why, when people see the S&P or when they see investing in long terms, it's very tough when you're, maybe broke or maybe a kid and you're trying to get into this and you're trying to make money, but you don't have that much to start with. That's why trading is so good because, yes, most people who trade their own money have to start with a lot. But that's why there are these fantastic things called prop firms. And here are my two favorite ones, Top Step and Apex. So first, let's go over what a prop firm is. So if you look at a prop firm, prop firm is a financial institution that trades financial markets using its own capital instead of using clients' money. Not really what I was looking for, but basically what it is you sign up for these prop firms, you buy these challenges. This is Top Step, right? So you go into Top Step, you purchase a challenge. Like I said, I trade futures, and then you pick one of these accounts. And you may be like, okay, what are these accounts? All you have to do is you have to buy this account. They give you $50,000 to trade with, more money than you probably have to set aside and trade with, and you have to make $3,000 before you lose $2,000. Now, my other favorite is Apex Trader Funding, which has very similar rules but not the exact same, and I love both of these. I love Apex because you can scale and trade multiple accounts at once very easily, which we'll get into later, but I also love Top Step because of its simplicity and how easy it is to pass an account. Top Step and Apex are fantastic because, look, if I just want to click select and then Tradevate, which I'm about to talk about, that's all you really need. And then you say, oh yeah, sure, why not? You put in your credit card or whatever, and you complete the purchase, and they give you this account with $50K. Does that mean you want to put $50,000 into each trade? Well, one, they won't let you, but two, no, absolutely not. There's such a thing called risk management, and that is why so many people fail. Don't worry, we'll get to that later. You are going to be so knowledgeable at the end of this video, I promise you. So, what is Tradevate? Tradevate is, without a doubt, the best, in my opinion, for trading. It is a broker with really good commissions, and this is the layout of Tradevate. So, basically, you can see we have options here of how many contracts to buy or sell. how to exit, how to scale. And I'm going to go over all of that once we get to our examples, my trades from before. And that'll come with my strategy. But just platforms to know review. TradingView. Beautiful for looking at all charts and seeing what's going on in the market. 100%, not even 99, 100% of actual traders use TradingView or at least know of it. Tradevate, fantastic broker. That's where you're actually clicking buy or sell. You know how everybody thinks about buying or selling with trading? That is where you literally click buy, sell, you enter your positions, and that's where the money comes in or goes out. Top Step and Apex, these guys are the ones giving you that power to trade. They're giving you the money if you don't have your own. As you can see, this 50K is $50 a month, but if you use a promo code, like, I know this guy Dodgy has one. Okay, I guess he doesn't. APW. All right. Whatever. There are certain promo codes. I haven't used Top Step. I haven't bought an account in a while, so you can get a promo code, and you could get this down to like 25 or 30. I'm trying to get a promo code from them soon. But basically, you go back, and these are your three big guys. And I'm going to dive more into what they're like in a bit. I just realized the market open. So now let's get into technicals. This is going to make a large chunk of the video, okay? So first things first, what is liquidity? That is a fantastic question. All right, so liquidity. We are trading something called ICT concepts. And liquidity, there is such a thing as buy-side and sell-side liquidity. So what that is if we go and look at swing highs and lows, that is a candle in which there is the lowest of lows in 3 candles or the highest of highs in the middle of 3 candles. So if I have 3 candles and the middle one makes the lowest of the lows or the middle one makes the highest of the highs, like this one right here makes the lowest of this low and this low, this one, its low is lower than the 2 on its side. So if a candle has a low or a high, lower or higher than the ones on its side, it's a swing high or swing low. And a lot of the time, these swing lows or swing highs is where liquidity is resting. So as you can see, this one, the high is higher than here and here, the high is higher than here and here. This is where there's liquidity. And what is liquidity? That's basically a bunch of unfilled orders. As soon as price always wants to go towards liquidity. And usually when we go towards liquidity and take it out, we will come back the other direction. For example, you see this obvious swing high. We come in, we take it out, we break it, we make a new swing high actually, and then we come down. And then what do we do? And by the way, we have liquidity down here as well. So we're basically traveling from liquidity to liquidity. So from high to low to high to low. The market goes, seeks liquidity, takes it out, and then continues on its path to find even more important liquidity. So that is why liquidity is so important. It is those unfilled orders that the market is going up, grabbing, processing, and then going back down or the opposite direction. So that's why liquidity is so important. Every single thing we do is going to involve liquidity. Is the biggest part of ICT concepts because it's where all those orders are fulfilled, and it's where we know that plenty of hedge funds and big banks and firms are going to be seeking trades and seeking stop losses from retail traders. Now let's get to fair value gaps. Now, let me show you a picture of a fair value gap. There are 2 fair value gaps. There's a bearish and a bullish. Bullish means that price is going to continue going up, whereas bearish means price is going to go down. So if I'm saying our bias for the day is bullish, that means that I think we're going to go up on the day. The S&P is going to go up, or the NASDAQ is going to go up on the day. So a bullish fair value gap. If there are 3 candles, so remember, we had the swing high and swing low for the 3 candles. Now with fair value gaps. And remember, guys, this is an overview of how to, learn to trade. If you have any questions on fair value gaps or liquidity, there are so many fantastic videos online. You could go on YouTube for free and search up what is ICT liquidity, what is ICT fair value gap. So that's why this is such a good video because it's giving you all the keys necessary to know how to trade. And if you have any questions, you could hit me up on Instagram, or you could go and search on your own with YouTube. So a bullish fair value gap, that is when there's 3 candles and the top of the first and the bottom of the third don't overlap. So this low is not touching this high, making this huge gap between the first and the third candle. The second candle is what makes the gap. So you may be like, okay, but the second candle is inside of this huge box, so it's not a gap. We're not worried about that. That's the one that made the gap occur. We're only looking at the first and third. Same thing with bearish, first and third. Not worried about the middle one because that's what made the gap. Low of the first and height of the third. So now, fair value gaps are just like liquidity, how we were talking about with buy side and sell side liquidity. They are unfilled orders. They're where the market wants to go. So a lot of the times, fair value gaps will get respected, like so. Let's see if we can get a good example here. So we have this fair value gap, right? We have 1, 2, 3 candles, and the low and high create this gap. What do? We return to where those orders are, and then we go and we go back down, respecting it. So what we want to do is we always want to come back and see if we could get a fair value gap to be respected. So if I could find a solid example here. Okay, so for example here, we have this huge fair value gap, as you guys can see. And what happens is when we make this bearish fair value gap from here to here, the low to the high, we come in, we hit into the fair value gap. So think of it as like a magician coming in, taking all the bunnies and then putting them in his top hat and dipping. All right, so, and what do we go for? We go for that liquidity. So you could have made a quick trade here from the fair value gap respect all the way down to the liquidity. So fair value gaps are supposed to be respected, and they can help you continue to the path. And that's why they're such great entries, because they're so good. Buyers and sellers, we discussed. Buyers and sellers are looking to get filled at points of liquidity, or they're about to get stopped out. They're very important parts of the market. So we know if we have this obvious swing high here, and many traders want to go short, they would go short and they would put their stop loss at this swing high. So that's why the market tends to come up, stop them out, and then reverse. So it's basically screwing over retail traders by taking them out and then doing what they wanted to happen. Now let's get into IFVG. So we just talked about fair value gaps. Now what about if a fair value gap gets inversed? So an inverse fair value gap is just the opposite of what we said. It's where a fair value gap is formed, but then we break through it. So instead of the magician coming in, grabbing the bunnies and putting them in his hat, he is now coming in, grabbing the bunnies and stealing them. He's running away. So once again, the magician comes in, takes all the bunnies, but then instead of going back up and putting them in his hat, now he's just throwing them, he's taking them away, and he's running away. So fair value gaps, right here, it gets inversed. If a fair value gap gets inversed, we can usually infer that price is going to continue in the direction of its inversion. Meaning that if price gets inversed, if this fair value gap gets inversed to the downside, we are usually expecting price to continue going down. So that's why inverses are so popular, because fair value gaps can get respected and then continue their path. But if fair value gaps get disrespected, we know that there's a good chance that, that whatever was going to happen with that fair value gap is not happening anymore because the inversion was so strong. So we had this bearish fair value gap. We thought we were going to bounce off of it and dip, but we actually inversed it. So it's like, oh, wow, there must be a lot of strength to the upside here. So that's why inverses are so powerful, because they're going against what you initially thought would happen. All right, let's get into SMTs real quick. So this is one of the main parts of my strategy, which we're going to pair together once you guys know all the terminology, and it's called an SMT divergence. I do not take a trade without this. An SMT divergence is basically when you look at our two indexes. So for example, you see we have NQ here on TradingView, and then we have so the NASDAQ, and then here we have ES. So if we go from NASDAQ yesterday or Friday from 1245 to 107, we went from a higher high to a higher low to a lower low. So we are on a decline slope from 1245 to 107. Now let's go from 1245 to 107 on ES. Give me a sec. From 1245 to 107 on ES, it's the opposite. And you may be like, okay, what does that matter? Well, let's think about it this way. Remember when I said that the S&P 500 and the NASDAQ are extremely, extremely similar? It's because they are basically showing how the market moves. Now, when there is a difference in price, because they're correlated, if there's a difference and they become not correlated for any reason, then you usually can assume that a reversal is going to come. You can't blindly do it. You need higher time frame bias, which is part of my strategy that I will tell you about in a bit. But usually, if we have an SMT divergence, meaning a difference in highs and highs or lows and lows, then we can assume that price is going to reverse. So, for example, if we have difference in highs, like if this was the S&P, and this was, I don't know why they did it like this. It's such a dumb graphic. But let's do it this way. So if we had, okay, if we had these highs and they were different, for example, these are going up, well, these are going down, we can assume price is going to go down after, and vice versa. If we have lows and this one's going down and this one's going up, we can assume price is going to go up after, because these guys are basically meant to travel together. And as soon as you lose one of them, as soon as one of them, goes away, it's basically like you're holding someone's hand as they're dangling off a cliff. If you let go, they're going to fall. So that's exactly how you look at it with S&T divergence. And it's a really powerful tool because it can show you exactly when price is going to reverse. Now, obviously, the thing about trading that gets a lot of people is nothing is guaranteed. But we're always looking for confluence. We're looking for as many tips or as many points to show that price is going to go in our direction. So that is SMTs. Now, real quick, let's go over the 2022 ICT model, which is going to bring together a lot of the concepts that you've already learned. So remember when we talked about liquidity? We said that liquidity wants to get seeked out, taken, and then go back the other way. Here we have a swing high. What are we immediately expecting? We're expecting price to go up to that swing high, take it out, and then go back down the other direction. So what do? We go up, we take the swing high, and then price goes down. Now, it's not shown in this diagram, which kind of annoys me. But what we can say is there was a fair value gap up here on a different time frame. So what happens after we sweep the liquidity? We form a fair value gap. So now we have two confluences. We have swept liquidity, and we have made a fair value gap. And remember how those are two very, very powerful things where we touch into them and then we respect them most of the time. So the 2022 strategy, the ICT 2022 model, is basically a liquidity sweep where we run up and we take out what are those swing highs or swing lows. We form a fair value gap, and then we come back up to both. We come back up to the fair value gap, respect it, and then continue on our way down. Or vice versa, we take out a low, form a fair value gap that's bullish, come back, respect the bullish fair value gap, and then soar up. So let's find a really good example. What do you know? So this is a low. We took out the low, and then on the way up, we made a fair value gap after taking out the swing low. Price, after forming the fair value gap, comes back into it, respects it, and then we explode. So that is why the ICT model is so good, because you are bringing together two very popular confluences. Remember, we never know what's exactly going to happen, but you want as many tools as possible in one trade so that your chances are better, your odds are better with the trade. So that's why having a really solid strategy is so important, because if you have liquidity on your side, if you have fair value gaps on your side, SMTs, then that's what makes a really good model like the 2022 ICT model. All right, we're going to take a break. I will be back in 1 second. All right, I'm back from the break. Still not wearing a shirt, but it's cool. All right, we're back and we're discussing kill zones. So what are kill zones? These are basically the most popular times where you want to trade because it's the most volume. It's the time where everybody else is trading. So usually if you have a very good trade, it'll happen pretty fast. So if we go to indicators in TradingView, remember I said TradingView is a very important tool. I suggest you look up a tutorial on how to use TradingView on YouTube, because this video, if I talked about all the uses of TradingView, that I wouldn't have time for everything else. I'd probably die. But, I use indicators. You go down, you look up ICT kill zones plus pivots, TFO, by Trade for Op. And basically, as you can see, it immediately goes on your screen, and it shows you the New York AM session, which is from 9:30 a.m. to 11. Then the New York lunch session, which is from 12 p.m. to 1. And then New York PM, which is 1:30 to 4, as you guys can see. And then it also, if you're using Power of 3, which I've done a video on, you could check it out if you want, for your daily bias, it shows the Asia session from 8 to 12 a.m. and London from 2 a.m. to, I think it's 5 a.m., my bad. So you usually want to trade within these kill zones. That indicator is so key. Obviously, as you can see, I had a very successful trade outside of the kill zone, but that's because the setup was mostly forming inside the kill zone. But normally, I like to take 1 a.m. trade and 1 p.m. trade every day, maybe even just 1 a.m. trade. But yeah. Okay, so next, we're going to go to... Now that we're done with kill zones, let's go to higher time frame bias. This is so important. Everybody thinks, oh, I could just see everything happening in real time. No, you have to develop a bias. So how I usually develop my bias for the day, and this is going to be a bad example because at the time of filming this, we're at all-time highs, so we basically have no bias. But what you usually want to do is you want to find the range that you're in, and you're going to get a tool from the TradingView app called Fibonacci Retracement. So when you see the Fibonacci Retracement tool, it's on the side here. You want to extend it from from a swing low to a prominent swing high, aka where liquidity is resting, and you want to see in what area price is reacting. Usually around the 0.5 to 0.786 area, which is called the optimal trade entry area, we will see a bounce and a continuation of price. So if price is going down towards it but hasn't reached that optimal trading entry, I usually like to look for shorts on the day. If price is there or bouncing off of it, I look for longs for the day. And you have even more confluence if you have a fair value gap on that level. So right here, as you can see, we went high to low, we had this fair value gap, we respected it, and then we mooned. And we haven't looked back since. So that's how I usually develop my bias. That's higher time frame bias, but also there can be higher time frame bias for trades. I'm going to show you guys my strategy in a bit, and I usually enter on the 1 minute time frame. However, give me a sec. When entering on the 1 minute time frame, that doesn't mean everything that I see that happens is on the 1 minute time frame. For example, on this trade right here, I had the 1 minute SMT, I had the 1 minute inverse fair value gap where it got disrespected, but I also had on the 15-minute chart a fair value gap to help complete my trade. So I knew, okay, and here it is. As you guys can see, a 15-minute fair value gap right here. We came in, respected it, and this is where my trade hit. I had higher time frame, aka time frame on a chart higher than 1 minute. I had higher time frame bias that confirmed that my trade was supposed to happen. Once again, there are no guarantees. For example, today, this morning, I am recording this now. I'm done trading for the day. I took one trade and I lost. We had the SMT, we had the fair value gap. We came in, respected it. It was a very good trade. We had higher time frame bias. We were sweeping on 1 hour and 15. And we were in that optimal trade entry that I was talking about. But we got stopped before we could hit TP1. And that is totally fine. Because remember, stuff happens where you can't control. You could do everything right. You could have all your confluences right, everything like that, and sometimes the trade won't go your way. Why I think the trade didn't go my way is because it is July 8th. Give me a sec. It is July 8th, and we have no news today, meaning that there's no volume in the market. Let's see. So, since there is no news in the market, we had a lot less volume here, and we were able to make these big moves. As you guys can see, my take profit 1 would have just got taken now, but instead we got taken out for a loss, which is cool. Doesn't really matter. I knew that it was going to be a no news Monday, so I sized down, and I'll talk more about that when we get to psychology, as well as risk management. But we got a little bit more. We talked about the OTE and the Fibonacci retracement tool, and that's how you develop your bias. But like I said, the higher time frames, you want to always have the higher time frame on your side. And when we get into my strategy, which we're about to right now, get ready, we're going to talk about the higher time frame bias. So now you're going to finally hear how I got this set up right here. All right, you guys ready for this? This is the big part of the video, at least what everybody thinks is the big part of the video. The big part of the video is coming soon, but this is the strategy that I do to be successful in the trading markets. All right, so here we go. First, I'm going to go on the 1 minute time frame, and I'm going to look for an SMT divergence with the S&P 500. We've discussed this before, right? So I will have the 1 minute S&P 500 on one side and the 1 minute NASDAQ on another, and I will be trading on the NASDAQ. I look for a 1 minute SMT. So for example, this was 12:56 Friday. Let's go over. 12:56. Give me a sec, sorry. Okay, so as you can see, from 12:45 to 107, we went up. And then if we go here from 12:45 to 107, we went down. That's an SMT divergence. What did we also do? We inversed this very tiny fair value gap. We inversed it. Now, you may be like, okay, we have the SMT, we have the inverse fair value gap. That's great, and that's my strategy. However, we have to go to the higher time frame, like I just showed you guys with this trade. We had the 15-minute fair value gap in our side. So that's higher time frame bias. Now, the last step, we find two prominent swing highs. So for example, this is one, and then this is another, this session high, this kill zone high, which has a lot of liquidity resting. You target those two, and as soon as price hits your first take profit, you're going to get your stop loss, aka the most you're about to lose, and you're going to move it right to where you entered. So as soon as you move it to where you entered, then you literally have nothing to lose. Congrats, you won on the trade, because you are sizing to the point where you got your first take profit. So now, if price comes down all the way, your stop loss is exactly where you entered. So now you only keep the profits of your first trade, which is why risk management is so important. So overall, my strategy is an SMT on the 1 minute and either an inverse fair value gap or that 2022 model that I discussed previously in this video. Then, as soon as I see those two things happening, I will quickly go to the 15-minute and 1 hour on both charts and make sure that bias is on my side. For example, some examples of bias would be a fair value gap on my side, or another SMT on a higher time frame. So if I am respecting one or both of those things, that'll be my final confirmation. And then lastly, the last part of my strategy is I scale my take profit. So I look for two highs, one being an extreme one, one being a pretty relative one. And then as soon as I hit the relative one, I move my stop loss to break even and let the other one run. Now let's talk about risk management. This is so easy. And by the way, that was the first example, and this is a beautiful example of risk management right here. We had a fair value gap, which I knew price tends to respect. So I put my first take profit right at the beginning of the fair value gap, and then my second one at this obvious low right here. What happens? we take out my first take profit, and then we come back and I get stop break even. Did I lose on the trade even though it hit my stop loss before my final take profit? No, because I managed my risk well and I scaled my profits. I took the money that I could get and I got out. As you can see, we also have the SMT, and then we have the inverse fair value gap here. So yeah. Okay, now risk management. Like I said, risk management is so key, and I'm about to give you the sauce for how much I use. There are things called contracts, which is what you trade, and instead of trading the NQ contracts, you're going to trade the micro NQ contracts. These are way smaller, and so instead of, how do I say this? Instead of, excuse me, instead of trading these big numbers and trading like 10 large contracts, you're instead going to trade the micros because even though you'll make less, you're also risking way less. So your stop loss can be a lot larger while you can also still make decent money. So, for example, right here, I was trading and this is 20 ticks right here. So my first take profit got hit for 20 ticks, more like, 18. So every NQ mini contract is $2. I trade 8. However, here is my risk management strategy. You trade 8 of them and you scale 6 at take profit 1 and 2 at take profit 2. Why that number? And that's sauce. Repeat that if you need. A replay if you need. 6 at take profit 1, 2 at take profit 2, and here's why. If you scale 6 at take profit 1, then you have already locked down a great amount of money. For example, that was 18 ticks, $2 per contract, 6 contracts. So you would have made $216 off that small move. Then we still have 2 more contracts going where if they hit your take profit, that's a lot of money. 2 times 40 times the $2 for, that's another $160 if your 2 hit. However, if you were to get stopped out for 21 ticks, 21 times 2 times 8 contracts, that's $336. That's a good amount of money. So, yeah, that's why you want to risk a good amount that you're affording to lose. So usually when I'm doing 18, or if I'm using 8 micros, I usually put my stop at about 16 ticks, just because that is about $250, and that's how much I'm usually good with losing on a trade. So, like I said, I scaled though. I made $216, and then my 2 runners got stopped out at break even. So overall, did I lose on the trade? No. Did I make nothing on the trade? No. I made $216 on one trade, which is very good, especially if you copy trade. Copy trading. Here we go. Copy trading, and I already said the percent risk. So if you have a 50K funded from Top Step or from Apex, then you want to be risking the amounts that I just told you. Now, copy trading. If you go to Tradevate, notice how I have one account here. This is because this is just like an Apex I don't really care about. But if you go to the settings thing, not this one. Where is it? If you go, there's going to be a button. Sorry, it's not on Top Step. But if you go to Apex and you go to Tradevate, you'll click and there will be a button here that says Manage Groups. When you click Manage Groups, you can create a new group and drag all your accounts over if you buy multiple. And the great thing about this is, if I have 5 accounts, like for example, I trade 4 accounts on Apex right now, all at once. So this $216 move that you guys may think is very small, actually made me $864 on the day, and I was done for the day immediately. And if this one had hit, then I would have made, 2,000 or something. I don't know what the math is. Like 1,300. I'm not a good math guy. But overall, as you can see, this is the importance of copy trading. If you have a system, aka my model, my strategy, with solid risk management and of course psychology, which is big, and we'll talk about that in a bit. If you have all of those things, copy trading will literally retire you and your kids. Copy trading is the craziest thing of all time. And what's the max amount what's the maximum amount of 50K accounts that you could copy trade on Apex? 20. So if you have 20 accounts and we get that same, remember, this was only my take profit 1. We didn't even hit take profit 2. This was only 21 ticks, or 18 actually. This was only 18 ticks. We didn't even hit my take profit 2. it's a break-even trade. It's like solid. If you're trading that $216 move on 20 accounts, you would have made $4,300 on the day with the 20 accounts. Assume you can keep that up, then you'll be making I don't know whatever, like 80K a month. Obviously, that's in a perfect world where you never lose, but guess what? You're gonna lose. I hate to break it to you. That's the thing about trading that kills people so much, and that is a perfect segue into the biggest thing of this entire lesson. And this is going to be where I delete everything. I delete my notes. I get away from the chart, and I talk to you face to face. Okay. I've discussed strategies. I've given you everything you needed. I've given you the basics on technicals. I've given you my risk management strategy. I've given you my trading strategy. And remember, I am totally fine with answering any and all questions. I made an Instagram. It's @StocksForStuds. Hit me up and DM me. I will answer any question you want. Join the Discord if you want. I am doing paid entry for Discord, but I do answer questions all the time. The only reason the Discord is paid is because I do live trading on it, so yeah. But I literally will answer any of your questions for free. I will also do one-on-one mentorship sessions. That is paid, but it's not that much money. So the truth of the matter is, there is nothing more important in the game of trading than psychology. You could say, oh, like, I learned what a fair value gap is. I learned what liquidity is. Congratulations. I bet you, if you watch this video and you take notes and then you go off on your own for another hour and you watch a bunch of YouTube videos and you ask me maybe 1 or 2 questions on Instagram, you will know all the technicals you need to know to be a profitable trader. Of course, you may want to take a bit, but you will know everything. Psychology, I cannot teach. As much as this talk is going to benefit you or not benefit you does not matter to me, because I know at the end of the day, it's on you if you want to be profitable. So here's how I'll start this. So I was never like the greatest person as a young kid with controlling emotions. Controlling emotions was always a tough thing for me. I was always angry. I was never focused. And, when I first got into trading, I was not having success. Not because my strategy wasn't good. Not because, I didn't know my stuff. Anybody can know their stuff. The reason is because if I lost, then I would raise hell. If I lost, then I would basically give up. I might be talking a little too loud. If I lost, then I would be like, okay, what am I doing here? And I would basically be like, this is a scam. I'm done with it. Like, I have seen people make ridiculous numbers trading, and I know for a fact that is going to be me in the future with trading. And I've seen what people have done in months, years, days even. People make yearly salaries in America in days trading. And it's pretty insane. However, you got to ask, what is the difference between 15-year-old me back then and those traders? If their strategy is amazing or not, that doesn't really matter to me. I knew that I knew my stuff. I've been doing this for a long time, since a young age. I knew what I was doing. The problem was my psychology. And here is the biggest piece of advice that I could ever tell you. Paper trade or demo trade. Nobody is forcing you to throw your money into trading. Nobody is forcing you to buy a live Top Step or Apex account. There is also no... I didn't even know my cat was there. There is literally no rush to this process. People start at different times. I'm 18 years old. Even if I literally started over, it would suck. I've been doing this for 4 years. It would suck to start over. I'd still be in the same spot at 22 years old. That's so young. You have so much time to make so much money. If you devoted years of your life, or you devote like hardcore months of your life to this one skill, it will change your life forever. I promise that. Because so much can happen if you just lock in and devote yourself to your trading. Now, here's why I say paper trade. Because you will get a feel of, 1, how to scale your take profits, like I talked about with risk management. 2, how the market moves, just how fast everything is. Because there is no feeling that compares to the feeling of actually going and seeing how fast it goes green or red. And there is another thing. You need to be able to simulate your emotions. How would you feel if you won or lost a trade? Because I'm telling you right now, let me give you a quick statistic. 90% of traders do not profit. 90% of traders fail. Is that because 90% of people are put onto the wrong strategy? No. I'm telling you this right now. I trade my strategy. It is not the only strategy that works. If it was, everybody would trade it and you wouldn't even know who I was. There are plenty of other strategies. There are different types of strategies. People will trade just support and resistance and make money from it. People will trade ICT like me and make money from it. People will trade strictly price action and make money from it. Everybody is trading their own thing because the market is so big, everybody could get a piece of the pie for themselves. They can take any move that they want. The difference between people who profit and lose in the game of trading is all mental, and I promise that. If you don't have the best mental, you either have to research how to get a better one or literally don't even try. Skip off this video. I'm sorry I wasted your time. Mental is so crucial. That's why you have to paper trade at first. And by paper trade, you can literally go to TradingView and they have a paper trading account and you could paper trade yourself. All right. And once, like I said, I do one-on-one mentorship. I answer questions and I have a live trading Discord. You could go in and check whatever you want. Today, I took my loss, but I went into it expecting that it wasn't going to go well because of No News Monday. Does that mean I don't take the trade? No, I scaled down and I took the trade on accounts that I don't really care about. I have plenty of Top Step accounts and I have plenty of Apexes. I care more about the Apexes because they're better for copy trading. The Top Steps, I don't really care that much about because I don't really use Top Step anymore. I only really use Apex. But I do still very much think that Top Step is good for beginners. So if you're thinking about prop firms, you could definitely check out Top Step. It's good. But I took it on my Top Steps because I didn't really care. I knew it was a No News Monday, and why would I affect the things that are making me money on a day where I didn't think I was going to make that much money? It's all psychological. If I was a dumbass, or if I was literally addicted to this and treating it like gambling, then I would have went on my Apexes, copy traded all of them, and been down 4 bands on the day. However, then this is the biggest piece of advice I could give. I know I keep saying that, but it's true. The problem with trading is people always think of it as a money grab. First of all, if you think that trading is a get-rich-quick ideology, you are so wrong and you are never going to be profitable. People sometimes ask me, like the first question that I get asked about trading is, yo, like, can you put me on? How much money are you making? How much money can I make as soon as I start? Probably none. In fact, probably negative. You're not going to make any money. I'm like, literally, there is no profitable trader. I'd be very surprised if you found a profitable trader who told you that the first month, 6 months, 8 months, a year was all sunshine and rainbows. It never is. It's the truth. But the thing about trading is it's all progress. Nothing, no thing in life, money-wise, is going to be like that. You are not going to immediately get a 10 million a year job at Goldman Sachs as soon as you pop out the womb. You have to work. You have to go through school if you want to do that. You got to do internships. You got to suck up to people. It's just the truth. With trading, it's the exact same thing. You have to have long hours researching your strategy. You got to work on your psychology. I do cold plunges in the morning. I meditate in the morning and at night. I pray. I visualize. I manifest. Like, I do all these things for my mental that people don't even know about. But it makes that big of a difference. If you're coming in there and thinking, oh, I'm going to make some money, you're doing it all wrong. In fact, as soon as you start your Top Step or Apex or whatever you want to do, I would highly suggest getting a piece of tape and covering the amount of money that is shown when you take a trade. For example, how much you're up or down on the trade in real time. Because you should only be trusting your system. You should only be trusting your stop loss and your take profit. Screw the money. If you use 8 micros and you scale 6 at take profit 1 and 2 at take profit 2, and you use your stop loss like I was talking about, like I just showed in the video, guess what? You'll be fine. Especially with my strategy, not to boast or anything, but it's a better than 50% win rate strategy. So if you scale correctly, you're going to make money. That's just how it is. So the problem with so many traders is that they treat trading as a get-rich-quick thing, and you go into the market expecting to make money, and then when you lose, you're surprised. Stop treating it like a money thing. It will only become a money thing if you think about it in terms of progress, in terms of skill. For example, if you're practicing how to play basketball and you're dribbling outside every single day, are you dribbling so that you can make money? No. You're dribbling so that you can get better at dribbling. It's the same exact thing with trading. And I know that's a weird comparison for a lot of people, but it's the truth. Trading is a skill. And the truth of the matter is people will learn drop shipping, which is fine. People will learn like Amazon FBA. People will learn crypto. People will learn all these side hustles. And the truth is, if you half-ass it or you don't devote a solid amount of your time to it, you're not going to make money with it. And you're basically just wasting your time, because if you're putting 50% into something, then you might as well put zero. It's the truth. Because and it's not like you're going to get it eventually but just at a slower pace. In a game like trading where everything is so fast, if you don't actually care about what you're doing, I have so many people that come up and ask me to teach them how to trade, but they don't actually want to learn themselves. They don't want to put the time in. They don't want to actually figure out what it is. Like, they're scared to learn. And that's fine. It's just not for you. And trading is not for a lot of people. But, I very much suggest actually giving a shit if you hop into this game. Another thing, find a community. You could join my community for free. I don't give a shit. Find a chat that is fully like a group, a community. I joined a Discord for free that trades basically the same exact thing as me. They trade SMT divergences all the time. And I just talk to the dudes. They're chill as hell. I talk to them every day. I go in the chat and I'm like, what's up, boys? I took this trade today. And they're like, hey, so did I. Or, yeah, we're up this much. We're down this much. We're just chilling and having a fun time because we know we trust our system and we trust each other to hold us up if we get a loss. Today, I posted my loss in the Discord with the guys that I talked to. Not even my own Discord yet. Only that Discord first. And they were all like, oh, I took the same thing. It's cool. Like, we'll get back. No news Monday. It's all good. Find a circle, and this goes for not even trading, it goes for life. Find a circle of people that are not straight dumbasses, all right? If you actually care about this, then you have to be able to surround yourself with people, even if you don't even like them, people who want to win. If you're drop shipping, why would you drop ship with someone who doesn't care or know anything about drop shipping? If you're doing crypto, why would you do it with someone who doesn't know anything about investing or trading or anything like that? It's the same exact thing. You want to surround yourself with winners. You want to be in a winning circle. If you're trying to train to get into the NFL, you're not going to hang out with a bunch of baseball players every day. That's just a fact. So the truth of the matter is, this thing is all psychology. It's all psychology. In fact, most profitable traders, myself included, state that 90% of this game is psychological and 10% is the technical that I just spent an hour teaching you guys, or however much I was. I literally am losing track of time. But the truth is, and I fully mean this, psychology is the biggest tool, and I'm going to keep hammering that in your head. You're probably like, okay, I get it. Psychology is the biggest tool. No, you don't understand. There are people who learn my strategy, my exact strategy. They know how to do it. They know all the technicals. They know what a fair value gap is. They know what liquidity is. And they still haven't made money. They still don't make money. And they know it, and it's all because of psychological. There's no other reason for it. You know that your strategy is good, but instead you're over leveraging. You're putting too much money in. You're over trading, which is another thing I'll get to in a sec. And you're just raging and getting mad and throwing a bunch of money into shit. Trade 1 to 2 times a day, 1 in AM, 1 in PM. That's all, or 1 in lunch, whatever setup you want, whatever kill zone you want. Trade literally 1 to 2 times and you're done. That's it. I don't give a shit. If you make $200 on that trade, imagine you had those 20 apexes. That's what you always got to think about. It's a slow game at first. You got to pass the accounts, of course. So that takes a long time and a lot of dedication. But if you're just going slowly, $200 a day, $200 a day, $200 a day, you're going to pass the funded account in 15 trading days. And that's pretty damn good. So if you go for 15 trading days of take profit 1 hitting, not even take profit 2 hitting, just solid, good trades with strong risk management, it'll take you less than a month to pass funded. That's just the truth. And here's another thing. Don't go into it like, okay, but I need this amount today. You don't need anything. All right? This market is not like handing out favors. This thing is very tough. So you want to get in, get your money, and get the hell out. That's always the truth. It is 10:30 today. I did my one trade. I took that loss. I'm not looking at the charts besides making this video for the rest of the day. I'm going to go get lunch, get a haircut, and enjoy my day. I don't give a shit, and it's Monday. I'll come back tomorrow. There's news tomorrow, so I'm actually going to be trading my apexes. So if you want to join the Discord and hit live trading, you definitely can. But yeah, this is, and I've said this for so long, and you need to listen to this. So many people fail because they don't actually know how to win. People will think, okay, I'll just learn this strategy. No, dude, if all you had to do in order to make millions of dollars a year or hundreds of thousands of dollars a year was learn what a fucking fair value gap is, then the world's economy would be cooked. It would be insane. The reason is people don't know that the truth behind being good at trading is all up here. If you lose, you have to sit back and think of it the way you would think of a winner. If you win, you're like, okay, all right, solid trade. We'll get back tomorrow. All right, good shit. Let's leave. If you lose, you got to be like, okay, I like this setup. Stuff happens. All good. We'll be back tomorrow. I didn't smile. I didn't frown. I didn't bitch. I didn't do anything. All I did was say, okay, we took the trade. It did or didn't go in our favor, and now we do the same thing tomorrow. 1 and 2 trades. Money, 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 money. The money is all people think about, but what they don't realize is if you focus on everything else, the money will come. I do not care about the money. All right, the money is totally cool and all, but that you need to learn that this is a truly the greatest side hustle or skill in the world. You know it's a good side hustle when people make millions off of it and actually make it their full-time career. You know it's a good side hustle when the biggest hedge funds or IB firms are hiring people to trade for them. You know it's more than just a side hustle at that point because it's actually serious money involved. And you can make serious money if you just take your time, stay true to your strategy, and don't get mad, bro. If I gave you a shitty strategy that made no money, you could totally be mad with me. I get it. Once again, not a financial advisor. I don't take any responsibility for your losses. But if I give you a strategy and you actually learn how to use the strategy, or if anybody else gives you a strategy, do something called back testing. I do this literally every single day. You go back through the market and you see how much or how little your trade actually occurred. So what I would do is I would go through the market, I would check for SMTs on the 1 minute, I would check for setups, and I would see how they do. And then I would say, okay, this is a good strategy. This is the strategy I'm going to use. If it wasn't doing well, if the results were not good when I was going back and seeing what's happened in the past, then I would just pick a different strategy. That's the glory about this. There's so much freedom. There's financial freedom. There's like so much independence that goes into this. You have your schedule, you log in, you make your money, and then you go do whatever you want. I see people, not fake influencers, real people that I know personally, go and live lavish lifestyles in their Corvettes or Mercedes or Lambos even, and they literally trade for 30 minutes a day. They come in, they go, oh, my setup, take it, okay, I made 5 bands or I lost 1 band, all right, we're done, bye-bye. Go hop in their Nissan GTR, my dream car, by the way, I'm copping that soon, and they go off and they enjoy their day. They get coffee, they get food, they lift, they do whatever they want. They lift, but you know what I'm saying. It's just the truth. There is no way of getting behind that psychology is the biggest part of this game by far. My cat is sleeping. And I'm telling you, dude, I am so free to help any one of you. As long as you don't ask me questions during trading hours, I will respond as soon as I possibly can. Because during trading hours, I'm usually locked. But, you know, once I'm done, once I've found my trade, once I've taken my trade, once I'm done for the day, I am all yours. My Instagram is @StocksForStuds. You can find me. We're at over 100 followers now. And yeah, that is the truth, guys. And I'm planning on doing a video fully on psychology. You may be like, geez, he just yapped. I had like minimal notes. You guys saw the doc that I was looking at for notes. Literally, this is all a brain dump. And the truth is I was giving you extremely valuable information. This information not only took me 4 years to achieve, it also took me 4 years of experience, learning, failing, progressing, and even money from mentors, from groups, from Discords. It took me so much time to learn what I am now doing. And most of that 4 years was dedicated to psychology, and that's the truth. I learned ICT 4 months ago. 4 months ago. The strategy that I taught you, I learned 4 months ago. Shout out to Paul. He put me on my trading strategy. He didn't put me on the exact strategy, but he put me onto the concepts that I started learning. And that is one of the other things. You want to find a circle of people that really help you and push you and motivate you to become better every single day. Because if it weren't for Paul, if it weren't for people like Paul, then I wouldn't make any money off this shit because I would be going into this blindly. It's like the blind leading the blind type thing. And why would I make a YouTube channel for you guys if I had no idea what I was talking about? Why would I make a Discord? Why would I do live trading if I had no idea what I was talking about? So that would just be a case of the blind leading the blind. but I truly care. I know my stuff. I've been around the block, so that's why I made this video to gift you guys for free, by the way. Gift you guys my tale, everything that I have in my brain about trading. And I'm not done with the psychology part. I'm going to make a video about psychology in the future, probably in a week or two. But, you know, this was a long video. It's literally everything you need. I promise you that. I have said everything I need to say, risk management, my strategy, the technicals, the basics, what futures are, what trading is, and of course, psychology, if I didn't fucking say that already. It's so important. It's so crucial. I promise you, you can make so much money off this shit. I've seen it firsthand. I've done it firsthand. And if you are a high schooler or someone watching this video, I want you to remember, $1,000 to a person in high school is so much money. It is a lot of money. Most people graduate high school with less than $1,000 in their bank account. If they have rich parents, maybe they have 5 to 10. All right, but if you're working your ass off, like at a restaurant or something like that, then you could have 15 or 20. And those are people that I respect so hard. You know, one of my closest friends works his ass off at a restaurant basically every day. And he makes he makes solid money because he puts his he puts his body to work and he gets the money. And that is something that I really respect. And it's the same thing with trading. It's just a bit more mental. So instead of doing the physical stuff, you have to be, I don't go to parties that often. I don't do shit like that. I'm usually, more times than not, either with my girlfriend or here at home researching at 12 a.m. on a Saturday. It is the truth. You have to devote your life to this, or at least a good part of it, if you want to be good. Because like I said, going 50% is going zero. So yeah, have a good one, guys. I'll be back soon with a psychology video. I promise that, and I will probably make a script for that video. Whereas this was a brain dump. It's everything you need. Hit me up on Instagram. DM me any questions you have. I will try to link YouTube videos for you or answer your questions by myself. I am so ready to help each and every one of you learn for free. And if you want a live trade with me, that is going to be paid. If you want one-on-one mentorship sessions, that is going to be paid as well. But I promise you guys, you know, I'm trying my best to do whatever I can for y'all. So, yeah, have a good one. Stay safe, and I will see you guys later.